So, have you ever found yourself in a position as an experienced investor or a home buyer where you have a broken chain? If you're looking to purchase a property and you're an investor, are you going to buy from auction? Do you want to do debt consolidation or are you looking to maybe do refurbishments? If you've been in any of these situations, quite possibly you've seen something online about HELOCs or you've seen something online about bridging loans. I do find that a lot of consumers make things a lot more complicated than they need to because they see these things online or they have these property gurus that end up in their feed and they start exploring things. So I want to make sure that you understand what these two products are because they can be very risky. They're not for everybody, and most people aren't going to qualify for them. Or as you understand what the criteria is, a lot of people are going to just change their mind. So both HELOCs and bridging loans are useful emergency mortgage tools, but the right option depends on your situation. Always seek professional advice and make sure you understand the pros and the cons of each product because you will experience that people who are trying to sell you something are only going to tell you the upside. They're never really going to talk through the cons with you. So make sure you understand what the downside of these products are. Let's start with a HELOC. So, what is a HELOC? A HELOC or home equity line of credit is a flexible credit facility that's secured against the equity in your home. So, this is ideal for people who have 40% or more equity in their home. This tends to be a good product for people that are older, and you have to have good credit. Let me say that again. You have to have good credit. So, this is not a product if you have bad credit or if you have low equity in your home. The average HELOC customer that I see is usually in their mid 50s. So it works a bit like a credit card. It's secured on your property. You can withdraw funds and repay, draw again within a limit. So it is just like a credit card. So the two products that we're going to cover off are HELOCs and bridging loans. If you look at a HELOC like a credit card and look at a bridging loan like a loan, it's a good way of deciding which one might be best for you. The top three reasons why someone would use a HELOC. So the first one would be just emergency funds to access cash quickly without remortgaging. There are a lot of people who are on really low interest rates at the moment. They have a lot of equity in their home, they have great credit, and they just need a lump sum of cash. Maybe they want to pay school fees. Maybe they have some home improvements they want to do. If you're looking to do home improvements, you can draw funds as needed rather than the full amount up front. Any refurbishment project you've done, if you've done one in the past, you know it always takes longer and costs more than you anticipated. So having a revolving line of credit where you can access the money when it's needed and only pay the interest on the money that you use is very useful. You can also use it for debt consolidation. So repay higher interest debts more cheaply. So, a use case for the debt consolidation may be you have several personal loans, you have some credit cards, you're paying them well because, again, this is a product for people with good credit. So, you're paying them well, you're not missing any payments, you're not making any late payments. But what you're finding is each month your balances aren't going down. So, you could use the HELOC as a way of consolidating those things that you already owe, putting them on a lower interest rate, and just freeing up some money each month because potentially, if the HELOC is the right product for you, you're now putting these debts on lower interest rates. So here are the pros. Let's look at the upside. This is the bit that if someone's trying to sell you this product, they'll talk to you about. It's flexible, so you can draw and repay as needed. So if you use the analogy of it being like a credit card using the equity in your home, let's just say you get a £30,000 line of credit. You don't have to use that full £30,000 all at once. If you're using it for a project, you could say, well, I'm going to take £5,000 out of my £30,000 limit. I'm going to start with the flooring on the project. And then as the project progresses, you draw the money out. So it's flexible. You can draw and repay as you want. You only pay interest on what you use. So if you have a £30,000 line of credit, but you're only using £10,000 of that £30,000, you're only paying interest on the £10,000 that you're using. And it can be cheaper than credit cards. So when you speak to your mortgage broker, they'll be able to go through the interest rates with you. They'll be able to go through the repayments. They'll help you plan out your project if it is a refurbishment project, to make sure that you understand the repayments and how much the repayments are going to be and how much it's going to cost you. Here are the cons. This is the bit that if someone's just trying to sell you a project or is trying to sell you this product, these are the bits that they may not tell you. So these are the cons of a HELOC or home equity line of credit loan. It's not widely available in the UK. So if you're online and you're hearing people talk about HELOCs, quite often they're people from the States. So it's a more common product in the US and in Canada than it is in the UK. But you can get a HELOC in the UK, which is why I'm talking about it. So because there's fewer lenders who do it, there may be fewer brokers who fully understand the product and can really advise you on the product and tell you both the pros and the cons. The interest may be variable. So unlike a secured loan or a mortgage, the interest might be variable. So you don't know what the interest rate will be until you've gone through the product. And when you withdraw it, it will let you know what the interest rate would be. But it might be variable. It's not a fixed interest rate. And most importantly, it's secured against your home. So this is a second charge on your home. So you're borrowing or getting a line of credit of, let's just say, £30,000. It's secured against your home. And anytime you're securing anything against your home, you need to make sure that you understand the product, understand the pros, understand the cons, and understand that failure to make repayments could mean that your home gets repossessed. So you should think very carefully before you enter into this. You should have a solid exit strategy, a solid plan for what you're going to do. What's the criteria for a HELOC loan? So what is the criteria? Who do you need to be? What do you need to look like? So you need a strong credit history. I've said it time and time again. A HELOC loan is for people with great credit. It's not for people who are struggling with their finances. So you can have no major adverse credit, no missed mortgage payments, no late payments, CCJs, defaults, anything like that. You have to have significant home equity. So this is why I say this is a product usually for older people. It's not for first-time buyers who have only had a mortgage for a couple of years, unless they pay down a huge deposit. You need to have at least 40% equity in your home to make it a viable option, because there's a maximum LTV or loan to valuation that you'll be able to end up with once you do the line of credit. So if you are very close to that LTV to begin with, it may not be a good product for you. You need a stable income. It's a loan. You're borrowing money, so you need to be able to demonstrate how you're going to pay that back. They will look at the property type. So the lender will look at the type of property. They want to make sure that it meets the lender's standards. So it's standard construction, it's in good condition. And responsible financial track record, as HELOCs require careful management. So you have to be someone who knows how to manage your finances, someone who is responsible, someone who is on top of things. A HELOC use case. So who would a HELOC be good for, or what is an example? So you're an older homeowner, you're planning on building a kitchen or an extension on your home, and it's going to be completed in stages. So instead of taking out a lump sum up front, you use a HELOC to release the funds gradually as each phase of the project progresses. Because, as I said, these projects always take longer and cost more than you originally thought. So, with a traditional loan, you would take out the full amount and you'd be paying interest on that full amount from the moment you take it out. Whereas with a HELOC, you're getting a line of credit that you only pay interest on the money that you pull out. So this way, you only pay interest on the money that you actually use, while keeping the flexibility to progress in the stages. So that's the perfect use case for a HELOC loan. People ask me a lot of questions, and that's why I do these videos. But not everyone's going to find me on YouTube. So I do have a book called A Mortgage is a Really Big Loan. This book is for anyone who's considering understanding how finance works. So it's great for young people. It's not just about mortgages. In my book, I cover off a lot of different things around financial literacy. I am one of those people that is convinced that it's not that people don't have access to financial literacy. In fact, there's so much information available. I think sometimes people don't take it as seriously as they should. So if you have recently moved to the UK, or maybe you have a young person who's getting married, or a son, daughter, niece, or nephew that are just starting their life, and you want to make sure that they have a sound footing and a good foundation, good financial literacy, this is a great gift for them. The book is called A Mortgage is a Really Big Loan. It's available on Amazon, and I'd appreciate your support. So remember, I make these videos not to replace speaking to a financial expert. I don't give financial advice, legal advice, or tax advice. I make these videos to explain mortgage products and financial tools that you can use. But you do need to always make sure that you speak to a qualified professional, someone you know, someone you trust, and someone that will give you the appropriate advice. Make sure that if you're working with a professional, that you actually listen to them. If you're working with someone who you don't feel you can listen to, or you don't feel that you trust, then you shouldn't be working with them. Make sure that you like, make sure you subscribe, and make sure you share this video. I will be covering off a little bit about bridging loans, because that's another product that I get asked about. And I'm going to explain the pros, the cons, and if it's a good product for you. Hi, my name is Anthony Lindsay, and I make videos to explain mortgage and finance products. I don't make videos to replace speaking to a professional, someone that you know, someone that you trust. I had a question, and it's a question that I get asked a lot. I get asked about two pretty complex products, which are HELOCs and bridging loans. So I said, let me ask ChatGPT, what are two emergency mortgage tools and how do they work? And ChatGPT spoke me through the HELOC loan and the bridging loan. And I'm going to help you understand both products. I'll go through the pros and the cons. I'll give you some use cases. And then I'll also explain what you should do if you are considering getting either a HELOC loan or a bridging loan. I'll focus on bridging loans for this session. So make sure you watch until the end. And I'll also be explaining how you can get zero broker fees on my services. So a HELOC loan is a home equity line of credit, and both HELOCs and bridging loans are useful emergency tools, but the right option depends on your situation. This is not a one size fits all. It's not a slick presentation. This is me talking you through bridging loans and understanding how they're used and if they're good for you. Always speak to a professional and get advice, and make sure you understand the pros and cons of bridging loans before you enter into one. Investing in property has its risks. Your home may be repossessed if you do not keep up the repayments on your mortgage. So what is a bridging loan? People often come to me and they've seen something online and they have these complex investment schemes and they're like, I need a bridging loan. Or maybe they're buying from auction. A bridging loan is a short-term loan secured against property or assets designed to bridge the gap until longer finance is in place. They're commonly used by property investors at auctions where fast completion is required, or when a property chain breaks and quick access to funds is needed. So I'd say the two main groups of people that come to me about bridging loans would be people that are buying a new home. So they have a home, they need to sell the home to buy the new home. Potentially, they're in a chain. The chain breaks and they need to purchase this new home before they've sold the home that they're in. That would be group number one. Group number two tend to be experienced investors. So these are people that have several properties of purchase and sold properties in the past, people who have flipped properties, people who have buy to lets. Those are the two key groups of people that come to me and I'm able to help. The third group of people that come to me are people that have just seen something online. They're trying to get into property. They've heard about this thing called a bridging loan and they come to me and they don't really understand what it is. So that's one of the reasons why I'm doing this video, because hopefully I can discourage that third group of people because it's probably not a good product for them and they're probably not going to qualify for it and it's not going to meet their needs. But group number one, people who are in a chain, the chain is broken and they need some money that they can buy the new home. Group number two, investors, this will hopefully be helpful for you. So the three top reasons for bridging loans: buying before selling. So you secure a home before the old one is sold. So as I said, you have a home you're trying to sell. In order to purchase your new property, you need to sell the property you're in currently. There's a chain, the chain breaks, the person that was purchasing your home, disappears or they don't qualify for the mortgage, but you still want to buy that additional property. That's a great use of a bridging loan, especially if you know your property is going to sell, but you just need additional time and you don't want to lose the property that you found. Number two, the other top reason why people would use a bridging loan is property auction. So when you go to a property auction, which is super risky, if you are not an experienced buyer, you do need to complete the purchase in a very short time frame. So most people would use a bridging loan in that circumstance. But this is for property professionals. This is not for your first residential home. This is not for you've just come off a course and someone has told you theoretically how these things work. This is for property professionals. Another purpose for a bridging loan, or the third top reason why people come to me for bridging loans, is for refurbishment. So to buy, improve, and then refinance. So they find a property that may be in distress, just needs some work. They're property professionals. They've done this before, and they want to buy that property, usually a very discounted rate because it's in distress. They then want to refurbish it, maybe do a new bathroom, kitchen, whatever, increase the value of it. And then what they're going to do is refinance it. So they're going to then take a mortgage out for it. So that would be their exit strategy. The pros of a bridging loan. So what are the pros of a bridging loan? It's fast and you can get large sums of money in days and not months. I've heard stories of bridging loans being turned around in 2 or 3 days. I would say give it about 10 to 15 days. But if you're an experienced investor, if you've done this before, those are the deals that tend to turn around really quickly because you'll have all your documentation ready. You'll have the plans for the property together. You've done this before. You're not new to the rodeo. So those are the ones that tend to turn around really quickly. Another pro is it's got flexible uses. So you can use it for residential, investment, or commercial. You will find with like further advances and some other ways of taking equity out of a home that they're very limiting and they won't allow you to use the funds for certain things. Whereas with bridging loans, they're more flexible, but I do want to stress these products are designed for professionals. So as a professional, you'll be able to price things out and understand how much it will cost you, how much you're going to make, and what a solid exit strategy is. And it can enable purchases that other mortgage or loan types cannot enable. So those are the pros of a bridging loan. Let's talk about the cons. These are the bits that people don't consider because I find that when people enter into these situations, they're always thinking about everything going right. So I'm going to make tens of thousands of pounds because I'm going to get this bridging loan. I'm going to flip this property. But things can and do go wrong. You have to prepare for things going wrong. Don't just focus on things happening right. So there are higher interest rates. So if you look at a bridging loan and you're considering doing it, you need to crunch your numbers and understand that the interest rates are quite high. So you want to have a solid exit strategy and you want to make sure that you're going to be in profit at the end of the whole thing. So when you pay off the bridging loan. Fees, so there are fees, so there are arrangement fees, exit fee, valuation fee, legal fees. There's lots of fees that need to be paid. So these things need to be taken into account when you're budgeting and doing your assessment on if this is the right product for you. There's a lot of risk. So if let's just say you're buying something from auction or you're buying to flip and things go wrong, are you going to be able to meet or satisfy the exit strategy? Have you taken the bridging loan out over the right term? Have you done a really short term because you think everything's going to happen very quickly? Make sure that you're taking all of the things that can go wrong into consideration because a bridging loan can be very risky. And you want to work with a mortgage broker who understands bridging finance and understands the process that they can sometimes help you and protect you from yourself. So here's a bridging loan scenario. A couple find their dream home that's perfect for their growing family, but their current property hasn't sold yet. Instead of losing out, they take a bridging loan to secure the new home right away. This gives them breathing space to complete the sale of their old property and smoothly transition into their new one without pressure. It's risky if your property that you're trying to sell doesn't sell or it ends up selling for less than you anticipate. So this is not the ideal product for everybody, and it's not the ideal product for every broken chain. But if you've crunched your numbers, you've talked to a professional, you understand the downsides, this could be a great thing for you. But what could go wrong? What could go wrong with a bridging loan? So picture someone taking out a bridging loan to buy at auction, because that's one of the top three reasons why someone would do a bridging loan. And they're expecting to refinance it quickly. So they're expecting to do the refurbishments, add value to that property with the work that they put into it. And then they're expecting to refinance it with a mortgage because the mortgage is their exit strategy. But then they find out that there's delays or they're unable to complete the work on time. If the refinance is delayed or declined, they're left paying high monthly interest and risk losing the property altogether if they can't repay. Because as with every mortgage product, your home is at risk if you fail to keep up the repayments on your mortgage. So you want to enter into these things with caution. You want to make sure that you speak to a professional. If you're considering a HELOC or home equity line of credit, if you're considering a bridging loan, make sure that you speak to a professional. Bridging loans can be powerful tools when used correctly, but they're complex and they do carry risk. An experienced mortgage broker can guide you through the process, ensure the loan suits your circumstances, and can help you avoid costly mistakes. I find that a lot of bridging loans fall through. And the reason why they fall through is because you're not working with an experienced mortgage broker who can help mitigate risk or can talk you through the process in a way that is thorough, that you understand, and that you know that it's for you. The other reason why I find that bridging loans don't go through is because of the client. The client isn't truly prepared. So if you want a mortgage broker that can get you a home equity line of credit or a bridging loan and do it based on results, you might want to speak to me. So the way that our firm works, we do not charge you a fee until we get you a result. So let me talk you through the process. You'll reach out to me, you'll arrange an appointment. During the appointment, within the first 7 to 10 minutes, I'll be able to establish if I can move forward with your loan, if I can help you, about how much it will cost, and if you meet the criteria. We'll establish that within the first 10 minutes. If after establishing that, it seems like a green light for you and a green light for us, we'll let you know how much you qualify for. We'll then gather the documents that we need to get you an agreement in principle. And this is key, this is vital. You may speak to some mortgage brokers, or you may go online and they're just keying in basic cursory information, get you an agreement in principle. You don't want to do that. With us, we're going to do a thorough review of the documents you send over. So before we even do the agreement in principle, we're going to get your proof of income, we'll get your credit report, proof of ID, all of the things required that we can assess and make sure that your agreement in principle will convert into a mortgage, a HELOC, or a successful bridging loan. This is very important. You haven't paid a penny. You don't pay until we've decided that you're going to move forward. You're happy with the numbers. You've reviewed the numbers. You've agreed the numbers, and we get you an agreement in principle. That's when you pay your application fee. Once you have the agreement in principle and we're moving to the full mortgage offer stage, again, you don't pay a penny. You will not pay a broker fee until we actually get you an offer. So if we don't get you an offer, you don't pay a broker fee. This is not a promotion. This is how we work every day. This is why our conversion is so high from agreement in principle to offer, because we won't get you an agreement in principle unless we're confident that it will convert into a mortgage offer. This is also why we're able to move so quickly. So if you're considering getting a home equity line of credit or a bridging loan and you want a results-based fee structure, so you're not paying until you get results, make sure you reach out. My name is Anthony Lindsay and my number is in the slide. Let me explain to you why most bridging loans fail, and most of them do. By most, I mean, if I get 20 calls from clients who are interested in bridging loans, I'd say about six or seven of them actually end up converting into a successful bridging loan. And that's not because of me. It's quite often because although many inquiries are made, only a small percentage of bridging loans complete. Applicants often underestimate the cost and the fees. So as I said earlier, there's lots of fees and costs that you will have to pay to do a bridging loan. It's not a quick fix. It's not a silver bullet, but it's a fantastic product in the right circumstances. So when you work with me, I'll help you calculate what the costs are that you can decide if a bridging loan is the right product for you. Exit strategies may not be realistic or acceptable to the lenders. So this is where, if you're not an experienced builder or an experienced investor, you may have an idea in your mind that I'm going to buy this property and convert it into 4 apartments, but you've never done it before and you don't understand the costs. And so your exit strategy of, well, I'm going to refinance it and split the title may not be viable. It may not be doable. And therefore, the lender may not want to proceed based on poor planning on your part. Properties may not meet lender criteria. That's pretty straightforward. So the best and most successful scenarios are with experienced builders who have done this before. Some borrowers simply need faster, cheaper alternative once they understand the details. So you want to make sure you understand the details and compare it to the other options that you have. And there may be other easier, faster, or cheaper options to what you're looking to do. But as I said, the top 3 reasons are that someone would need money because a chain is broken. And usually this is going to be the fastest, cheapest, and best option for you in that circumstance. So a bridging loan could be good for you then. Auction is usually another good, solid reason why someone would need a bridging loan. And a professional property investor or developer will often use bridging loans to get them through circumstances where they need quick access to money, because a bridging loan can be turned around in days, not weeks. My name is Anthony Lindsay, and if you need a mortgage, remortgage for buy-to-let or for residential, if you need a specialist product such as a HELOC or a bridging loan, make sure you book an appointment. We don't charge any fees until we get you results, but we're always happy to have the conversation with you. As a word of advice, I'd recommend if you're considering any of these products, make sure you speak to a qualified professional and make sure you have the conversations early. So don't go and bid on a property first and then decide you're going to need a bridging loan. Don't get in a situation where there's a broken chain and then last minute you decide you need a bridging loan. Don't start a project and run out of money and then decide you need a bridging loan. These are all things that you should start investigating well before you need them, even if you decide not to move forward, because speed will be reliant and dependent on your ability to be able to produce the things that the lender needs to be able to assess your application. As a professional mortgage broker with 30 years of experience, I'm here to help you, guide you, answer your questions, and quite often protect you from yourself. So, any of these products could be a good fit for one person, but a bad fit for another person. We'll go through everything. I'll answer your questions. I'll never pressure you. But as I always say, I move really fast. So make sure that if you do need to move with urgency, that you are prepared to move with the urgency that I can get your deal moving with. My name's Anthony Lindsay. Make sure you like, make sure you subscribe, and make sure you share these videos. I don't make these videos in any way to replace you personally speaking to a mortgage advisor. Make sure you speak to someone who understands the products and someone who works on your terms. Meaning, if you're a visual person, make sure that it's someone that is a visual person. If it's someone that explains things and you don't like things over explained, make sure that you find someone who teaches in your learning style, because doing a mortgage for a lot of people is partially teaching them and explaining products to them. But I'm happy to take appointments. We don't charge for appointments. You should book an appointment, I would say 6 months in advance of when you think you need it. That way we can give you the information that you need. Thanks for watching. And as I said, make sure you like, make sure you share, and make sure you subscribe.